Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it's been a damaging day if you're an equity market bull, with the only solace being that the Nifty is fighting for its life to protect that 17,000 mark at this point of time, and barely at this point of time winning, it seems, Santo. But we still don't know. We still have about 28 minutes to go for the end of the session, so we do not know whether we'll be able to close below the 17,000 mark or close above. Bulls will hope that it is above 17,000. If you look at the Nifty and Sensex, they're clearly around a 2-month low level amid a very massive, what has been a very massive global sell-off since Friday evening. And rupee, of course, the currency remains the major story of the day, plumbing, new record lows against the US dollar, much like almost many other emerging market currencies at this point of time. But very interestingly, Santo, information technology stocks have made a very rapid comeback in the session and are right now, with the Nifty ID right now being the sole sectoral gainer on the NSE. And if you look at the mid and small caps, that is where a lot of the selling is happening. Clearly, mid and small cap stocks are crumbling under pressure because risk aversion at this point of time seems very high, and investors are getting out of riskier stocks at this point.
The last two trends that you mentioned doesn't really come as a surprise. IT stocks had already taken quite a bit of beating since the beginning of this year. So I guess those who wanted to sell most of them would have anyway got out. So that explains why probably the shares are not falling as much, and you could even see some bit of covering coming in there. And yes, mid cap very clearly, they have been the star performers during the recent rally. So some bit of unwinding out there. Now more than stock fundamentals, probably over the next few days, it will be the moves in the rupee that will dictate stock market sentiment. The way the rupee has fallen to a record low once again, despite RBI's best efforts to defend it. And also we could see some bit of margin related selling now coming into play. Prices, when they fall, it means that traders have to put up more money with their brokers, and if they are unable to do that, the brokers will unwind their positions, which in turn then kind of sets off a self-fulfilling prophecy. Prices fall, more people panic, and then prices fall some more as others also try to get out. And also now some may feel that this is a good time to be looking for bargains, but with the earnings season so close, it's very likely that probably investors may decide to wait for some time and look out for the management commentary before deciding to commit in their favorite stocks.
Well, Santo, I think although we have said that the 17,000 mark is quite crucial, but I think the more critical level would be the 16,800, which is where I think the 200-day moving average of the Nifty lies at this point of time on the daily charts. A lot of technical analysts were of the view that if the index breaks below that level, I think that is when a lot of the views in the markets will change. But until unless that happens, then we still remain in that structural uptrend that we were seeing prior to this sell-off since last week. That said, let's quickly now move on to some of the stocks that were buzzing in trade today, starting off with Santo.
Crisil, now the stock has been one of the steady performers in 2022 so far. The fact that now much of its revenues are coming from its research operations, and that's also where the margins have been quite fat, although not as juicy as the ones in its core ratings business, but still this is now, in terms of revenues, it is clearly now accounts for the bigger chunk. In addition to that, the company is also trying to scale up its advisory business. The stock recently hit a new high, but there is still plenty of juice left, going with the good fundamentals, and the June quarter numbers were pretty good. And despite the overall challenging environment where you actually saw the number of capital raising issues coming down, still the company was able to maintain its margins across all segments.
I think, Santo, for me, the major issue, of course, yes, the company is trying to diversify its revenue stream, especially with the research wing trying to become more prominent in the revenue contribution, but rating still remains quite a big contributor, especially as far as the margins are concerned. I think that is where a lot of issue may lie, because corporate bond issuance, although they have picked up recently, I believe that going ahead they'll get slower and slower, because you are in a rising interest rate environment, and in that sense, larger corporates might prefer to borrow, I beg your pardon, from banks than to go into a market where interest rates are already quite high. So I think that issue will remain going ahead for the stock. Apart from that, if you look at the past 3 years trajectory, Santo, of sales as well as of profit, it does not really give you so much inspiration that going ahead the company could provide good capital appreciation for stock investors, and largely whatever upside you have seen has also been driven by the fact that the company has been able to return a lot of cash in the forms of buybacks and whatnot. So clearly this is not really a very ultra growth story that you can get into. Probably there are better opportunities out there in the market if you're looking for capital appreciation. And overall, the deterioration that we are seeing in the return on equity of the company, especially in the past few years, I think that is a risk that investors ought to watch out for going ahead. Well, the first stock on my radar today, and one of my two picks to probably brave the recessionary headwinds that we are seeing in global economy at this point of time, is Eicher Motors. Now, why Eicher Motors? Because Eicher Motors is coming out of a slumber, right? For the past 1.5 to 2 years, the company has been in a slumber. Its volume growth had deteriorated. But recently, especially starting with FY23, the company seems to have found its mojo, especially with the launch of the new line of Royal Enfield motorcycles in the form of Hunter 300 and 350. Santo, I think what Royal Enfield is trying to do with the Hunter brand is to bring the Royal Enfield name to consumers to which it was probably out of reach. The first time Royal Enfield buyers who could not probably afford a 1.5 2 lakh rupee bike, I think they are bringing it closer to those sort of customers. And while the traditionalists might say that it's diluting the brand even more, but what it does for Royal Enfield is it just expands the customer base even more going ahead. And I think a lot of analysts out there and investors even are betting on this fact that this outreach could expand volume growth going ahead for Eicher Motors. If you look at Prabhudas Leela, they have put the stock as the preferred bet in the two-wheeler space because they believe that the domestic side of the business, of course, will do well with new product launches driving volume. But the export side of the business has also been holding quite well, even in the current environment that we are seeing globally. So it seems like both the engines are going quite well, and therefore any sort of correction in the stock could be an opportunity for bargain buying.
Well, the stock has had a good run up over the last month or two, and for good reason here. We've seen some pretty robust Q1 numbers, and as you rightly pointed out, the response to its new launches have been fairly good. So that being the case, it probably the uptrend could continue for some more time, although investors would be closely watching the Q2 numbers, because it's after a long time that you saw a big jump in the Q1 numbers, a good jump, and as well as the company was able to maintain its margin. But now, can that sustain? And also, let's not forget, some of the analysts have pointed out that by making the bike, it's ultimately it's premium bikes in a sense, right? And there's only so much that you can keep increasing the prices, and the audience for that eventually will be only limited. So that is one of the key risks at this point of time. So is the best behind? Well, probably the Q2 numbers.
I think Santo, probably that is the reason why Eicher is trying to expand this market by bringing in probably the lower end of the premium segment. I think the products in the lower end of the premium segment, trying to get in those new customers who would probably in the past not been able to afford a Royal Enfield bike, because let's not forget that the brand still remains quite attractive. I think people will still want to own RE brand brand name than compared to any other premium bike out there, and I think that is where this could be a very crucial strategic move as far as Eicher is concerned.
Well, next stock, AIA Engineering. Now, this has been a market leader in the field of chrome castings, and the key thing about this company here, CJ, has been that at a time when most other manufacturing players have been struggling with rising input prices and pressure on margin, AIA Engineering is among the few that have actually been able to pass on the higher cost to its consumers. And that apart, it's got a very robust order book position at this point in time, close to about 700 crore worth of orders, and demand from all the key segments, be it steel, cement or thermal power plants, has been quite good at this point in time. Mining could probably so far it has held up well, but given the volatility in commodity prices, I would still be a little careful, a little watchful about that. But on the whole, according to ICICI Securities, the other two triggers being that clean and strong balance sheet and a good order book are obviously two things that make the stock stand out at this point in time.
Well, Santo, AIA Engineering's order book clearly is impressive at this point of time, but what my issue could be is the fact that AIA has also been linked to the the entire capex revival story that we have been listening to for the past couple of months. And given that we are entering a very high interest rate environment where interest rate could continue to go higher, probably well into 2023, I just feel this may derail the capex story, or not derail, but probably delay the capex story, and therefore lead to a derating for the stock, given the fact that eventually there will come a point where the RBI might have to think about slowing down the economy artificially to rein in inflation that we might see because of the falling rupee. So from a very macro perspective, it looks like things are getting a little hazy and challenging for AI engineering. But as you said, from a very micro level, it seems like the fundamentals are shaping up quite well for the stock. Well, the next stock on my radar today, and this could be a surprising pick because it has been one of those stocks which has seen a lot of correction, but Sona BLW is clearly becoming a very interesting pick in the market. The stock has fallen about 20% in the past 3 months, Santo, and I feel that right now it is offering a very good risk reward given the composition of its revenue. Why I say that is because 25% of Sona BLW's revenues come from the electric vehicle segment. Now we know that in the entirety of global automobile market, one segment that has been growing quite spectacularly is the EV space. We have seen that in the earnings of Tesla, even at home, Tata Motors, Mahindra & Mahindra, everybody has been talking about EVs. So clearly with almost 25% of revenues providing that sort of a hedge, this is one stock that could probably be able to weather the global storm as far as earnings are concerned. Apart from that, if you look at a domestic business as well, there has been recently been a ramp up in order wins both in the traction motor as well as from the India passenger vehicle original equipment manufacturers. So clearly at this point of time, both the engines look quite good, and with the correction in the stock that we have seen almost 20% in the past 3 months, this is looking like a good bargain opportunity, Santo.
Well, my only quibble here, CJ, is that the EV story looks good, and for a while the market was gung-ho about the stock, but that no longer seems to be the case. If you look at the way the stock has performed so far in 2022, it's down close to about 37, almost nearly 40% now.
Yeah.
The rank underperformer, considering that we had 2 solid rallies during this year. So this to me is probably an indicator that the market is sensing something at this point in time, which is why this stock, they've stayed away from this stock. Now it had 2 fantastic blowout quarters. Both quarters were quite strong, and over the last couple of years, in fact, the numbers have seen a quantum jump. That's where the re-rating has come through. But now that round of re-rating appears to be over for the time being, is what I feel, looking at purely at the price performance at this point in time.
Sometimes price could also be, in the fact that the market just could have jumped the gun too much, in the sense that they might have priced in too much growth too soon, and that can sometimes lead to exuberance and probably overrating, if you may call it that, as far as the company's prospects are concerned. But if you look at it from a industry point of view, clearly they are at the beginning of a growth juncture, especially when it comes to electric vehicles, because this is no way a very saturated market like an ICE market in that sense, and therefore I feel that probably it's a bit harsh to say that the best of the story is now behind us.
Well, last stock on my watch list is Alkem Lab. Again, this stock has done fairly well over the last 3 months. It's been steadily inching up among the pharma pack. This has been among the better performers. Now, there's been a significant improvement in both its top line as well as EBITDA margins during the first quarter, and that's where probably we saw then the market slowly warming up to the stock. Yeah. It's a dominant player in the generics market, domestic generics market, and it's also trying to scale up its US business as well. And besides that, biosimilars is another key area of growth which Alkem is focusing on at this point in time, and the company has about 950 crores of cash on its book. So among the better placed pharma stocks at this stage, and you can already see that in the performance, the way the stock has been performing over the last.
Well, clearly, Santo, I think recently, if you look at the pharma pack, investors have been leaning towards companies which have more domestic focus, and with Alkem almost getting 2/3 of its revenue from the domestic market, clearly becomes top of the pack as far as, along with probably Cipla out there. But I think my concern here would be that while revenues may look safer, margins may not, because of the fact that even though the export business contributed less, or maybe 1/4 to the revenues, they contributed a large chunk of the margin because they were higher margin products. If you look at the US business, that is where all the concerns started for Alkem, at the end of March quarter, when the company out of the blue suggested there has been a lot of price erosion, and then other pharma companies followed and confirmed the same. I think that is where the issue will remain. In a recent meet with Nirmal Bang's, Nirmal Bang Equities analyst, the management indicated that price erosion remained quite elevated as far as the US market is concerned in the September quarter. I think therefore there is a possibility that overhang may remain in the second quarter once the second quarter results are in front of us. Apart from that, Santo, if you look at the recent trend in margins as well as earnings per share, there has clearly been a lot of deterioration, and I think it will take some time for investors to be convinced that there is a re-rating opportunity to be offered here, because I think the company will now have to show it in its execution, and they are also now implementing a new strategy when it comes to the US market by focusing on limited competition products. But we will have to wait and see whether that plays out well or in favor of the company, and only then we can see a re-rating on the stock.
Well, with that, a quick take on the markets. Indices continue to be under pressure, and Nifty once again struggling to hold above the 17,000 mark.
Yeah.
It's down to 17,015.
I think we are just 15 points away. So probably if this weakness continues, I think Santo, we might just close below that crucial 17,000 mark. And then, of course, all the attention will turn to 16,800. But if you look at the VIX has moderated a little bit since the morning. It opened with almost 9.5% gains, but at this point of time, sitting around at 22 level, higher by about 6.5%. And sectorially speaking, even the Nifty IT Santo, we started on the episode higher by about 1%, but at this point of time, the Nifty IT has also given up a lot of its gain, and is higher by about 0.6%. But banks, real estate companies, pharma included, have all given up massive amount of value erosion at this point of time, Santo.
So Nifty futures actually quoting at a discount to
spot. Which basically shows that there is a lot of short positions being added, but this could also be positive news, because if we do see some sort of change in sentiment in Wall Street later in the evening, then this could be a trigger for a good short squeeze.
Yeah, considering that we have
tomorrow.
expiry coming up in another 3 days. Well, and what do we keep an eye out for, CJ?
Well, Santo, a lot of the data points will come out tomorrow, so there's not much in the market today except for how the US market behaves. But if you look at the economic data points that are coming out tomorrow, China's industrial profits for August will come out, so that will be a very important data right in the morning around our opening bell tomorrow. Apart from that, ECB chief or European Central Bank's President Christine Lagarde will be speaking tomorrow, so that is another speech to watch out for. And apart from that, in the US, you watch out for the new home sales as well as the consumer durable goods order to gauge how the consumer sentiment and the property market is doing in the US, Santo.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again tomorrow, 9 a.m. Till then, have a great day.